Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can hear all of our podcasts at americastalking.com. Support Everyday Economics by making a tax-deductible charitable contribution. The link's in the show description. We're recording today's episode on Friday, August 2nd, and joining me as always, PhD economist, Dr. Orphe Divounguy. Dr. O, the housing report. You had some thoughts about how it was going to come in June, and I don't know that you were out there on a limb, on your own. You didn't get it quite right. Came in at a surprisingly higher number. So, you're not often pessimistic about the housing industry. In fact, I think you're pretty optimistic about housing. I mean, that would make sense, right? That's right. Fact of the matter is, you and I think virtually everybody else that looks at this industry, and tries to analyze it, just missed under that housing. That number came in at what, 4.8%?
That's right. Pending home sales.
What is that? So what is that? So let's clarify the definition of pending home sales. Is this homes that are under contract and are going to be closing, an aggregate number of those, whether they're closing in 30, 60, 90 days, or what?
That's right. It's contract activity, contract signings.
Okay.
And ultimately, what we saw this spring season is basically a decline in home sales from a year ago. And I think that's the part where I was wrong. I think that I had been very optimistic that with existing homeowners coming back on the market, on the for sale market, with kind of rate lock easing and the supply of homes coming back on the market, we would see sales also increase in 2024 when compared to a year ago. And instead, what we saw is some homeowners came back, new listings surged at the start of the spring season, but buyers did not, for the most part. And part of the reason buyers did not, for the most part, is because we had a big surprise increase in mortgage rates in April. Mortgage rates remained somewhat elevated all the way through June, and existing home sales continued to remain below where they were last year. As a result, inventory increased, right? More and more housing kind of stayed on the market unsold. And so that's what we saw for the first half of this year. And then you get to the June housing market report. And in the June housing market report, you realize that home sellers are pulling back, right? Because that's what they do. Home sellers usually come back from January to May, and then during the slow season they pull back. You said you get fewer and fewer listings coming on the market, and so this new report from the National Association of Realtors that shows pending home sales up 4.8% in the month of June was very surprising to me, because what this means, it's a leading indicator of where existing home sales are going to be in the July report. And I think that's surprising, right? I had expected that potentially buyers who would come back due to the slide in mortgage rates that we're seeing right now, they would come back and maybe snap up the new homes that are on the market, because we have a lot of new homes that are being built. We have more new homes under construction or started than we've had since in I think 15 years. And so I was thinking that potentially we would see existing home sales continue to decline, but new home sales actually increasing in the months ahead. Right. In fact, I wrote about that on the Center Square Everyday Economics column. And now what we're seeing is this big surprise increase in pending home sales, which could mean that buyers are coming back, making a late season comeback, a late season push, and that they're maybe buying up all of the existing homes, unsold existing homes that are on the market right now. And so that's a positive surprise, and definitely a windfall for folks in the housing industry.
Yeah, a couple of pieces of data that that have come out recently. The Federal Housing Finance Agency earlier this week noted that prices increased 5.7% year over year in May, but that was the smallest gain in 10 months, and then in April it had been up 6.5%.
Yes, so
There was
that
another data point that was sitting out there that I thought was somewhat interesting. I don't have it right in front of me.
the price growth
Um,
data that you're pointing to is, I think, the
oh, it
key.
was the. I'm sorry. I just wanted to note the fact that the per Freddie Mac that the 30-year mortgage right now is sitting at 6.73%.
Yeah, it's
So
even lower.
we've had some stability in
It's
that.
even lower today.
You're right.
It's coming down. It's coming down very fast because of the uh, Chair Powell's comments, but also the jobs report that we got this week. Uh, it's coming down pretty fast. We should be in the low sixes today. Um, and really, again, an opportunity for those who had been sitting on the sidelines to finally jump into the housing market and
Yeah.
grab onto that bottom rung of the ladder. Uh, because I don't think the labor market is going to crack, and yet mortgage rates have eased. Really, an opportunity for potential first-time home buyers that were on the sidelines to finally grab onto to the bottom rung of the ladder. Housing costs are coming down pretty fast right now, so yeah, great time to jump in to the housing market.
Anything else that you're seeing sort of in the data that you can lean forward on? I mean, just any thoughts, in terms of what to expect perhaps in the next 30 days or into the fourth quarter of this year.
Well, look, price growth is going to slow. Price growth has slowed. But the decline in mortgage rates could could put some pressure again, because I
Mm-hmm.
think people are going to jump back in, take advantage of the low interest rates, uh, and that could actually uh, help to absorb a lot of the new home inventory that's out there, push down the existing home inventory as well, uh, because I mean, it had slowed. Inventory growth had slowed to almost a standstill last month, and
Mm-hmm.
so unless you see a bunch of sellers coming back in the late season, you could see inventory decrease and some price pressure again. The decrease in mortgage rates reigniting price pressures in the
Mm-hmm.
housing market.
Mm-hmm. So I mean, like to completely spell that out, that you think if the more like, because we have people, it seems like that maybe that are pulling back their listings at this point. It's the general seasonality, of the U.S. housing market, where schools are starting in some places. Schools have already started, like in the Southeast. I mean, kids have gone back
That's
to
right.
school this week. A lot are going to be going to school next week. Up here, I think we're 2.5 weeks away from school starting. So for families, it's not necessarily a great time to be listing a house or to be trying to move, because of the implications of that. Um, but
That's right.
are
That's right.
but
Most
but
people don't move at this time of year, but the decline in mortgage rates will
yeah,
likely stimulate some activity among people that had been on the sidelines,
okay,
uh, that were just waiting. Remember, the median age of renters has increased, and part of the reason it's increased is because a lot of renters have been sitting on the sidelines
right,
for longer. Just couldn't afford to move into
right,
buying a home. Uh, Also, Zillow data actually shows that 64% of renters today had also been in the market, in the for sale, looking in the for sale market at the same time,
mm-hmm,
before settling for a rental. And so, when the opportunity comes, I think a lot of people are going to seize that opportunity, which is going to be a little bit odd, right? Because uh, we usually tend to see kind of this decline in the late
yes,
season, and again, I mentioned last month that we might see a late season push, and
yeah,
that might actually materialize.
The
with
pent up
mortgages
the
coming down.
pent up the pent up demand could make for some atypical statistical outcomes here, huh?
Absolutely. Let's call that atypical. That's right. Where basically you have mortgage rates kind of creating their own seasonality. We saw that last year and the year before, and potentially we could see that again this year as more and more people will try to take advantage of the this decrease in mortgage rates. By the way, the decrease in mortgage rates might not last very long. Uh,
Mm.
and that's why I think it might be a perfect opportunity for many people to get back in.
Well, I appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high-quality podcasts at americastalking.com.